subject of IT, there was this interesting note that I was reading from Nuvama, which basically said that this period of January 2024 is very similar to what we had in Jan of 2022, only the polar opposite. So Jan 22 was the start of the IT stocks declining. Interest rates were at its at the lowest, and they started increasing from here on. So the macro situation was the exact opposite. This is Jan of 2022. What happened was that first the IT stocks corrected about 35%, but the EPS estimates the EPS downgrades only took place much later, and it took place for 2 years later, FY24. So now what Nuvama is asking is that will the reverse take place? We're in Jan of 2024, where we've got the interest rates at its highest level. They will start declining from here on. So will the stocks rally first? And then the EPS upgrades will follow maybe 6, 9, 12 months down the line. But purely in terms of the numbers, what we've seen is a stable quarter, not as bad as what the street was fearing, given the demand constraints, the higher furloughs, the weakness in the discretionary spending. TCS has reported a growth on the top line. Infy contraction in top line at 1%. Was better than estimates. Both the companies reported a pretty good margin performance. For TCS, it was actually a margin beat and a second quarter of margin expansion. The TCS management is sounding positive. They're probably talking about BFS bottoming out, if not in Q4, but maybe at least in Q1. In fact, the management is saying that Q4 BFS revenue growth could be higher compared to Q3. So they're looking at a quarter-on-quarter revenue growth. So all this is adding on to the excitement. And plus, in terms of the IT performance, it's the mid-cap IT stocks which have done better. The large caps have taken a bit of a backseat. So maybe you are seeing that catch up. In the last 12 months, the Nifty IT index is up 26%, whereas TCS Infy have rallied 16 and 17% respectively. Sandeep Agarwal of Sovilo Investment Managers is now with us on the show. Sandeep, how do you expect IT to play out from here on? It's not that we've got big EPS upgrades, but the stocks have gotten re-rated already.
So, Rima, we have to see 2-3 perspectives on this. And first of all, if you see the NASDAQ and the S&P and Dow Jones, despite, still people speculating whether it will be a hard landing or soft landing of the US economy, they are making new highs, right? And now if you put that situation that, Indian IT stocks got beaten down because there was a fear that those markets will suffer. And if those markets are going to suffer because they are the client market, eventually we will also suffer. But if those markets are recovering so sharply, so there is no reason for this Indian IT index to be, not going up, because finally the impact comes from that market. So that is one perspective. Secondly, as you rightly mentioned, one of the reports, I think, that view is very correct. Last year in January, when, January 22, everything started falling. When the news of interest rates going to be increased and all these attrition issues were there. And now when the reverse of it is looking like, then obviously these stocks will recover. Now, as far as EPS upgrade question is concerned, I think EPS upgrade always, trails. It will come with a lag effect. In my view, there will be the revenue growth doesn't impact the large names in a big way because everyone has some decent expectation for FY26. But the big impact will be on the margin front, because I think margins this year has been very low and primarily impacted by attrition. So now when attrition starts pulling off and growth comes back, you will see a big jump in the margins, and that will lead to substantial EPS upgrade. But that will happen in probably Q4 a little bit, and then Q1 and Q2, and that is what market is discounting now, because market is always ahead of time, and so that is what is getting discounted in the current rally.
But Sandeep, hi, good afternoon. Having said that, let me just ask you, given what you have heard from TCS and Infosys so far, when you start talking FY25, what is the kind of top-line growth that you think you can already start extrapolating, looking at the commentary, the companies, the management's body language, etc.?
So I think, next year will be a year where, we will get back 8 to 10% revenue growth, which is generally long-term revenue growth for the large names. FY24 was obviously an exception because clients were postponing in fear of recession and they were waiting for client signals. So,
Oopsie. Oopsie. Okay, all right. I think we'll try to get Sandeep back on onto the show. By the way, the markets actually have moved up. Will we see 22,000 today? I don't know. A few of these stocks are just flying away. Titans moved to the high point of the day. I think we should get Titans intraday chart up for you on the screen. Tech Mahindra was asked is up. It's moved a little bit higher. But L&T, we need to pull up a few heavyweights out there. L&T is a stock that's moved up. Titan as well has done pretty well. I think we had HDFC Life's numbers, if I saw it correctly on the screen. I think that stock, in fact, had moved up a little bit. And SBI Life as well has moved up. But I believe Sandeep is back with us. Yeah, Sandeep's back with us. Sandeep, you were making that point on tech, so you could complete that. And I just had a question for you. Is large cap tech is doing well, but mid cap tech as well is moved well. And over the last few years, you've seen when tech gets into a sweet spot, maybe sometimes the bigger money is made in the mid and the small cap tech. Your view?
No, absolutely. So the point I was trying to make is that FY24 was an exception year where, due to fear of recession and clients postponement, we have seen very muted growth for the large caps from 0 to 4%. And one or two large caps have even seen revenue decline. But FY25 will be substantially better compared to that. I think even large names like TCS, HCL should be 10-12% growth, and even Infy should be around 8 to 10%. So I think, this is a year of recovery. And remember, this recovery will come with substantial improvement in margin with falling attrition. So that will mean, again, some kind of EPS, better EPS growth, number one. And also those EPS will further see upgrade. So I think, that is what market is now clearly seeing, because once the downgrades stop, or once the, the estimate cuts stop, that is the time for the turnaround. And I think this has already started in month of August. Since then, the IT index has been doing well. If you recall, in August, one of the large IT companies stopped the variable pay and postponed the offer letters. So I think that was the bottom. And now clearly, with this in this quarter, I think no one will have to cut their estimates in a meaningful way. And that is a clear story. Yeah.
Right. All points well made. Just playing the devil's advocate here for a bit. You would agree that this is and management themselves are saying this is a macro call, right? Now, history tells us that whenever we've had very large interest rate increases in the US in a very short time span, and we've had 500 basis points of those, there's no soft landing. Right now, consensus is soft landing, no landing, etc. Usually, you get a recession. That's the price which is paid for getting inflation under control. Suppose that plays out in 2024 in the US. Can you tell us last time we had a recession in the US, what happened to IT services revenues?
No, so, absolutely, we have a huge dependency on the US, and if there is a hard landing, there will be an impact. But let me put it this way. As outsourcing is the cheapest way of executing your large deals or software requirements. So we have seen whether it was post-Lehman crisis or whether after the tech bubble burst in 2000, every time we have seen the recovery or the impact, both the things are much lower in Indian IT services firm versus the global tech firms, because our prices are very low and our execution costs are low. So we are the last one to be cut and we are the first one to be rewarded. Let me put it this way. So if that happens also, I don't think there'll be much impact. So I will give you a very interesting data. Despite, stocks correcting since January 22 by a substantial, 20-25% in the coming quarters. But, if you see, the estimate cuts were very minuscule. So this is a very stable industry. You cannot get very high growth and you cannot see a deep cut. But having said so, if there is a hard landing in the US, obviously because of sentiments, the stocks will see correction. Fundamentals may follow, and which may not be as bad as seems to be. So I think, right now it is giving decent sign of good recovery.
Okay, fair enough. Let me bring in Prakash Diwan into the conversation as well. And, Sandeep, take your point. Hard landing, then all bets are off, right? For now, let's go with the current consensus estimate of a soft landing, right? Prakash, hi, afternoon. Welcome to the conversation. It's all about technology, right? Now, Sandeep was just telling us that FY25 expects steady state growth of 8 to 10% and, perhaps a margin expansion as well. If that is the situation that we're working with, then it boils down to, what's in the price and what's not. As Rima points out, TCS today is trading at about 27 times, Infy is 1 or 2 notches lower than that. So for 8 to 10% growth, are you willing to pay more? I mean, how much headroom do you see on stocks if 8 to 10% is steady state for these companies?
Yeah, so that's a very interesting point, Surbhi, given the fact that, it's the price that is showing a lot of exuberance, not the earnings itself.
Not the growth, yeah.
Yeah. So and then I would go back to a very valid point that Sandeep made, that it was a sentimental impact on the stock prices rather than the business impact, which never happened. So if you recall, beginning of last year, 23 Jan, we were all talking about a very severe impact of the recession or anticipated recession, which hasn't happened. And then we kept on expecting that to be deferred and expected to happen in the next quarter. Q3 numbers yesterday evening, what they tell us is that the worst of the quarter, the weakest of the quarter, also Q3 has not given you any negative surprises, and that's why when Reema asked for my first reaction in the afternoon, I said the numbers are absolutely okay. There's nothing to worry about, but the market is rewarding TCS and Infosys for the kind of stock performance or underperformance that we've witnessed throughout the entire year. So it's a catch up on the price, and hence you'll probably see some PE expansion. But if you expect PEG numbers, it probably be available at trade between the band of 21 to 24 times. So, I'm talking about a price earnings growth number if 10% is what you would expect going forward. So from that perspective, it's still not expensive. And the market might want to see some sector rotation favorably towards some of these names. And there are lots of options available. So if you missed out on the bus on these two, you have some other names that you could ride on. So that's what the market will do. Till probably Wipro comes up with a number which is slightly disappointing or something. But this will percolate to the entire sector, should be more importantly than just these two names.
Sandeep, thank you very much for joining in with your thoughts. We'll connect with you once Wipro and HCL Tech also report their numbers.